This conference will now be recorded.
Good evening to one and all present for today's session. Uh, now we will go back to that World War case study which we had completed the first half. Okay, so can you open that Excel file, World Wars One? You open both the Word file as well as the Excel workbook which you have done halfway. So make sure all of you open both. Open both the Volvo's case study Word file as well as the Excel file. Keep it ready. So I will share the screen with you. Okay. Yeah. So put up the Word file. Right. So this is the first half of the case study. Yes, it will go on. So let's begin. Yes, Pa. So here we had done with the initial things of right in the last class, where we had mentioned the cost of the bus as 75 lakhs, the maintenance cost per year is 10%, increase in the rate in the maintenance cost every year it is 15%, total life of the bus is 4 years, and the depreciation rate is 25% under straight line method. So straight line method means there will be a constant amount of depreciation. Okay. So next is to shell out that 75 lakhs, we require we are going to approach for a loan. Okay, so that loan, yes, ma'am. So that loan we have got. This how much? 75% has been approved as the loan. Remaining 25% is raised by means of equity. So what is the interest rate charged on the loan? It is 15% as the interest. And what is the total tenure of the loan? That is also 4 years. So right, the bus is also 4 years. And in the period to complete the payment of the loan is 4 years. Okay, and the total cost of equity is 20%. The tax rate is put up as 5%. And as I've told you, what is the amount in debt? It is 56 lakh 25,000. So only 75% is raised, right? So 56 lakh 25,000. Okay, and the interest income to be earned is 5%. Diesel rate is 64 per liter, and there's a price escalation of 15%, as well as we have an inflation of the price by also 15%. And what is the total seating capacity of the bus? It is 35 members. Load factor is 15% of the same. And the ticket price per person is 350 rupees. Okay, and there is an escalation rate, increase in the ticket rate at 10%. Yeah. Fuel efficiency. So per liter will cover how many kilometers the bus will cover 5 kilometers per liter. And per trip, how much does the driver charge you? 600 per trip. So the miscellaneous expenses for one trip. What does miscellaneous expenses cover? See, it has been put up as a note. Miscellaneous costs will include the cost of parking the bus in a shade. Okay, and this amount acts as a buffer and also takes into consideration the yes, you can see here the cost associated with the co-driver. Okay, so miscellaneous expenses, and of course toll charges per trip is 800 rupees. So it's the route from Mumbai to Pune, and total distance kilometers is 155 kilometers, and estimated hours for one trip is 3 hours, and per day how many trips will be covered? Around 4 trips will be covered. So this basic information, I hope it's clear for all of you. So let's start with income statement slowly, along with the debt schedule. There are so many things to be covered in the Volvo case study. It's the biggest case study actually. So are all of you ready with this? Can we start? Yes, are you ready? Yes, fine. So let's begin. So we'll start with income statement. Okay, so first is we have to put up the total sales revenue generated every year of the bus. Okay, so how do you put up the total revenue? So here you have to be a little careful. I'll be going very slowly, especially for this case study, because a lot of things are involved in the calculation of every concept here. Okay, so first we have to calculate the revenue generated for every year from the bus. Okay, so for the first year, okay, how do you generate the revenue? Let's see to that. Okay, so let's begin with this. So, how do you generate the revenue for the first year? So, now your revenue generated would form what formula? See, for the year one, okay, now what is the price per ticket for, per person? How much is being charged? How much? 350 is being charged. Okay, so your revenue should be, I'll put up in the notepad, it is ticket price, okay, into seating capacity. So ticket price is 350 per 350 rupees. Yes. Seating capacity is how much? 35 passengers can sit. Load factor is 15%. 50% is the load factor. And how many trips per day? It is four trips per day. And for the entire year, because it is per day calculation, right? Now we have to calculate for the entire year. So the same ways we're going to calculate now. Okay, so what is the ticket price? I'll keep this here in the side. Okay, so your ticket price is 350 into seating capacity of the bus. Seating capacity is 35 passengers into what is the load factor? 50% into how many trips per day? Per day we have 4 trips into 365 for the entire year. So this much you should be able to get. I'll repeat it again. See, how do you generate the revenue? In total revenue generated equals to what is the price per person charge, the ticket price? That into, okay, what is the total seating capacity of the bus? 35 members into what is the load factor for the bus? 50% into how many trips per day? 4 trips per day into 365. Why 365? For the entire year since you have to calculate. So for the first year, you're going to generate revenue like this. Please calculate for the first year. Then I'll teach you for year 2, year 3 and year 4. Have you done? Are you able to calculate the revenue for the first year? Now, we'll go for the next years. Okay. Now, for the first year, we have got this much. Now, for the second year, let's go back to the case study. What the case study say? Okay. See here, see the second para. It says to generate revenue, Volvo decides to charge 350 per person, which we have calculated, and due to inflation, they plan to escalate the ticket price by 10%. Okay, the diesel required by the bus, that part is later. So if you observe the first line of the second para, to generate the revenue, Volvo decides to charge rupees 350 per person, and due to inflation, they plan to escalate the ticket price by 10%. So every year there is an increase of 10% in the ticket price. So the revenue what we have generated for the first year cannot have any increment because the moment you start you cannot hike the price. Yes. So from the upcoming years you have to hike the price. So what you're supposed to do here is for year 2 to year 4, you have to increase the price by 10%. Now this is the current revenue generated for the entire year. Now this plus 10% increase because every year there is an increase of 10% in the ticket price. So what you're supposed to do is equals to this amount into how you used to do it 1 plus 10%. So you get 98 lakh 36,750. Okay. Now the same thing if you calculate for the rest of the years, you're going to get to the same way. So please calculate for the year 2, year 3 and year 4 all of you. Have you finished calculating it? Done for year 2, year 3 and year 4. So till here I hope it's clear. For year 1, year 2, year 3 and year 4. Have you arrived at the have you carried the revenue for all the 4 years? So now this is the revenue generated. Let's come to the other income later because we have a lot more to calculate on this. Other income, nothing but interest income on the surplus cash. First, let's fill up all these details and then we'll come to the other income. Now, coming to the fuel cost. How do we calculate this fuel cost? Now, coming back to the details, fuel cost is yes. See, diesel required by the bus is charged at rupees 64 per liter. So for 1 liter, the diesel is priced at 64. So totally, how many distance in kilometers are being traveled? Let's see the case study. 155 kilometers. So 65 per liter for diesel, and the total distance covered in kilometers is 155 kilometers. And what is the efficiency of the fuel? Fuel efficiency means what? 1 liter of diesel will cover how many kilometers? So, fuel efficiency is 1 liter of diesel will cover 5 kilometers. It is being given over here. If you observe, 5 kilometers is being covered. Okay, into as usual number of trips per day and into 365. So how I'm going to calculate the fuel cost is equals to diesel rate per liter. Diesel rate is 64 into total distance covered in kilometers 155 into fuel efficiency per liter into number of trips per day 4 trips into 365. So here, see here totally you have to observe. See here diesel rate per liter is 64 per liter into total distance in kilometers. So here, yes. So total distance in kilometers, it is 155 kilometers. So what is the fuel efficiency per kilometer? Per this 1 liter, it is 5 kilometers. Okay, and into total number of trips for one day into 365 days. So how many trips in total has been covered? It is this way you are going to calculate the fuel cost. Okay. So I'll repeat it again. Now 1 liter of diesel, okay, will give you 5 kilometers. 1 liter of diesel for the bus will give 5 kilometers travel. So, which means your fuel cost is nothing but total distance in kilometers. Now, if 1 liter gives 5 kilometers, what about 155 kilometers? Like that, we have to calculate. So, diesel rate for 1 hour is for 1 liter is 64 per liter. Okay. So, and for 1 liter, how many kilometers have been covered? 5 kilometers. So, 1 liter of diesel, which is 64, into total distance in kilometers traveled is 155, which we are going to go ahead. Okay. And now per liter, what is the fuel efficiency? 5 kilometers have been covered for 1 liter of diesel. So that is divided by 5. Okay, so we have this diesel rate per liter into distance in kilometers divided by, okay. So at this we're going to calculate the fuel cost. Now, do we have an increase in the fuel cost or no? Is what we have to check. Let's go back to the case study. Yes, we have here, see if you observe. The diesel required by the bus is charged at 64 per litre with the escalation price, rise in the price of 15%. Okay. Also includes driver's cost and miscellaneous expenditure. Okay, there's an increase in the price by 15%, and this we will calculate right away. Yes.
Ma'am, could you explain once again how you arrived at 28 lakh 96,640?
This one, ma, fuel cost, yeah. See, now the total cost per liter of diesel is 64 rupees. Okay, so I'll just put up here. See, diesel cost if you take here, see, diesel cost per liter, okay, into total distance in kilometers covered, because see one full trip he is going to cover with the diesel what he has here. So in total, from where to where he is going from Mumbai to Pune. So what is the total distance traveled by him? Okay, it is 155 kilometers. So total distance traveled, or distance in kilometers, into trips per day. But before that, what you're going to do is you're going to divide this, divided by fuel efficiency. What does fuel efficiency mean? Fuel efficiency is nothing but, now 1 liter of diesel, so 1 liter of diesel will give you 5 kilometers. What about 155 kilometers? That's all. That's the actual diesel cost, how they calculate. And here, yes, so divide by fuel efficiency, then into continuation, trips per day into 365. Okay.
Okay, ma'am.
Is that clear?
Yes, ma'am.
And this is for year 1 month, because every year there is an increase in price by 15%. So what you're going to do is you're going to arrive at the year 1, which I've done here, and from year 2 onwards it should be equals to this into 1 plus 15%. So you get answer like this: 43 lakh 31,136. And for the rest of the years, you can just drag. So please calculate the fuel cost, then we'll move on to the maintenance expenses. Because this case study cannot go very fast. I have to be a bit slower, very slower actually. This is an enormous one. Yes, I've already completed calculating the fuel cost. Shall we go for the next cost? Maintenance expenses. I've done completing the calculation of the fuel cost. I hope for everybody it is clear. If you have not done, calculate your fuel cost. In case if you have done, then you can react for the same. Only one person has finished doing the fuel cost. What about the others? Fine. So next one we'll go to the miscellaneous one. So maintenance one. What does the maintenance cost say? Okay. Now coming to your maintenance cost. How do you calculate the maintenance cost? Maintenance expenses, see, is what? What has been considered as a maintenance expense? Let's see here. See, miscellaneous charges per trip it is rupees 300. So for one trip, the miscellaneous charges is 300 per trip. Now, how to calculate your maintenance expenses? What does the maintenance expenses say? So here, if you observe, additional expenses could go up to 5 lakhs with 70 lakhs, and the company can incur 10% maintenance cost on the revenue of that year with the escalation rate of 15% yearly. I'll repeat it again. Now, the purchase cost of the bus is 70 lakhs, which you have seen. In addition to 70 lakhs, 5 lakhs also has been incurred, okay, because of some administration expense or something like that. Okay. Now, here in this case, company can incur 10% maintenance cost on the bus on the revenue of that year. So, maintenance is 10% on the bus on the revenue of that year with the escalation rate of 15%. So, every year it's 15% increase in the maintenance expenses. So, let's begin. So, for the first year, it is revenue into on the revenue of that year. So, 10% increase equals to revenue into it is 10%. So you should get 88 lakh 94,250 as the maintenance expenses. So what is the amount you're going to get for the same? It's 8 lakh 94,250. Distracted. So here, every year there's an escalation in the price. So this one into see here this into 1 plus 1 plus 15%. So it should come up to 1,28,388. And for year 3 and year 4, we can just let's just drag it. You get the same answer. Please complete the maintenance expenses. So complete the maintenance expenses calculation.
Ma'am, can you just keep it on the year one fuel cost formula, ma'am? I tried, I'm getting error 510.
See, Pa, here I've elaborated. See.
Yes, ma'am.
So once you have done both, let me know. Then I'll go to the driver's course. Because as I told you, this case study I cannot go very fast. Slowly, I have to take you through the entire case study because it's a voluminous one actually. Well, that's why I've taken now. I have not taken the initial stage of your FM classes. So complete both of these, and then I'll go to the driver's one. Yes, are you done? Both the fuel and the maintenance have you done, ma? Very good. Shall we go for the next one, which is your driver's cost? So till here, is it clear for all of you? Have you done the calculations carefully? Yes, so let's go for the driver's cost now. So what does the driver's cost say, ma'am? Drivers say, yes. The last pair. Other cost could be taken, like driver cost is around rupees 600 for one trip. So, which means for first year, the driver cost is 600 rupees for one trip. So, how many trips per day? Four trips per day. Okay. Yes. So 600 per trip. Now, how many trips per day? We have four trips per day, and for the entire year, as usual, it is 365. Now, as I've told you, there is an increase in the rate, okay, by 15% every year. So, what you're supposed to do is how you did your miscellaneous expenses in the same way you're going to calculate it. Okay. So let's start here. Driver cost per trip is 600 per trip equals to 600 per trip. How many trips per day? Four trips per day. Into 365. Okay. So press enter. See, have you got this much? 8,76,000. Now for every year there is an increment of 15%. Okay. Same procedure. Equals to this into 1 plus 15%. That's it. So please do the driver cost once again. Yes. And this table you have to revise at least twice or Have you completed? Have you completed the driver's cost? Okay, only one person. What about the rest? Okay. Let's go for the next set of expenses. Next one is miscellaneous costs. Miscellaneous. Okay. So for this per trip, what are the miscellaneous charges incurred per trip? What are the miscellaneous charges? Let's go to the case study and see. See here the last line. Miscellaneous charges is rupees 300 per trip. So miscellaneous charges per trip is 300. Again for the whole year if you do same thing, number of trips per day into 365. And this miscellaneous charges will also increase by, okay. So here, so let's go back to the Excel file equals to miscellaneous is here only, see 300 into, okay, number of trips per day into 365. So please do it. So show you should have at 4 lakh 38,000. And every year there is an increment of 15%. Same procedure equals to, so it should be 5 lakh 3,700. Again, drag it for the rest. Next, toll charges. Toll charges is 800 rupees. So equals to 800 rupees into same thing. Number of trips per day into 365 days. Because we are calculating it annually, right? So same thing will be there. So it should be 11 lakh 68,000. And fine. So this total amount there is no increase or something. It remains the same. No 10%, 5% increase. Okay. Okay, same thing. I'll drag it for all the years. So what happens if you drag as usual, it will not arrive. So freeze it here. Freeze what? Freeze both. Okay. Next, you have to calculate the total cost of your revenues, which is your sum function, equals to your sum. So you should be able to get an amount of this one. So 62 lakhs 72,890. Okay. Now drag it for the other years as well. Determine for the other years as well. So complete till here.
Ma'am, can you show formula for maintenance expenses of year one?
Yes, ma'am. I put up Sita. You can just see. You complete off till total cost of revenues, then I will go forward from there. I put up C breakup for maintenance expenses.
Okay, ma'am, thank you.
Okay. So I have the remaining costs as well and calculate the sum of all the costs. Right, have you done? Are you still working on the same? First, I have the GP now. Right? So, I have the gross profit. Okay. So, equals to what was your gross profits? Revenue so sum of both actually revenue plus other income minus expenses. Now you add this empty cell as well. Okay. So sum of this. So I'll put it off here only. See with this minus. Okay. So if you add both, how much will you get? Okay. Values are already added. Minus. From here fuel cost to here total amount. So now actually this basement will not come. What happens is I'm showing you these two you add up, empty cell you add up, minus from E24 to E28. Like this you're going to take up. So what you can do is you're going to calculate the total once here you can just put up the total here. Or anyways, you can just take the cell reference. How it's comfortable, the same thing it's for you. So you're going to get something like this. I'll repeat it again. Okay. Now see by here, how do you arrive at the GP? Usually GP, what is GP? Sales minus cost of the goods sold, correct? So sales is your revenue which is already there. In addition to your revenue, you also have other income, okay, for the company. Other income, currently we are not working on that. That will arrive at the last, but you have to consider that also when you're calculating it because moment we add that, your entire answer will change later. That's why what you're supposed to do is equals to what is your gross profit, sales, revenue plus other income minus expenses or minus your total cost. So you get this much 26,69,610 rupees. This is your GP. Okay, so just put across to get the answers like this. Okay, so here you can now we have to come to depreciation. So calculate the GP now. Calculate the GP now. Gross profit, and what your earnings before interest, tax, and depreciation, EBITDA. So have you arrived at the EBITDA? All of you? Because consider that other income cell as well. That will be put up at the last actually. That surplus income. So all of you have arrived at GP. Anyone is still working till there? Have you finished working? If you're working, you finish it off. Arrive at the gross profit. Yes, I'll proceed from here. Next is depreciation. Okay. Now coming to the depreciation part. Yes, see, the depreciation rate is 25% of the value of the bus. Correct. So, anyways, how do you calculate depreciation on a straight line method? Equals to value of the bus, which is 75 lakhs, into the rate of depreciation, which is 25%. So you arrive at 18 lakh 75,000 as the depreciation. This is the amount of depreciation, and this will be the same for all the years. There is no like rise in the level or something like that. So again, if you try, you won't get the values, you have to freeze both. So I'm going to freeze both the sides. Yeah. Now the interest expenses. What is the interest expenses? Interest rate. Now the total loan offered by the bank is how much? It is 56 lakh 25,000. So what is the interest rate on that? That you have to calculate. Equals to, so take the loan amount. Okay. Into the interest rate over there. So what is the loan amount? This one into what is the interest rate? 5%. Okay, here, see, interest expenses, if you observe, total debt to be raised is 75% of the loan. Okay, so out of 75 lakhs, 56 lakh 25,000 has been approved as a loan. Okay, so however way you can define it, interest on debt is, sorry, I here, 1 second, wait. This has to be done. I'll repeat it again. See for here, total loan approved is how much? 75 lakhs, out of which 75% has been approved for bank loan. So which means 75% of 75 lakhs is 56 lakh 25,000. So this has been selected, 56 lakh 25,000 into your interest rate. Your interest rate is, yes, the interest on rate, which is 15%. That should be 8 lakh 43,750. Okay, 8 lakh 43,750. So please calculate the interest expenses. So once you do interest expense for the first year, you can just pause there because for the rest of the years, you're going to take the reference over there. So for the first year, you can just calculate the interest expenses and you can stop there. Yes, arrived till here. If you get this amount, okay, then you're going to come to the debt schedule, which is at the bottom. Because that you're going to complete it, calculate the interest expense complete table for all the 4 years, and then go back to the income statement. So if you're done with that, now let me ask you. Now the table you have solved because I made it very slow today. For the only reason it's a very no, as I told, it's a very huge table. Because see, you have to solve the balance sheet, debt schedule, cash flows, arrive at equity, and then finally is this. Okay, that's why. Now till here, whatever have you done? Is it clear for you, or do you have any doubts on this? Till here, everything is clear. Very good. Because at that stage, in case if you have any doubts, just speak up. Unmute yourself or put up in the chat box. Don't stop because I'll be going on. Because the next tomorrow's class, what you're going to do is you're going to first solve the debt schedule. Then take that to the income statement and then go on to the cash flows. So the connectivity is like that actually. Now so far in Bangalore Cafe and Pharmacy, you were only doing the IRR calculation. It was very short and simple. But here in this case, it is not like that. Okay, so slowly we have to go, we have to understand every stage here, and then we have to arrive at the final solution, which is calculation of your IRR. Okay, so you stop here, save your files till here. So tomorrow when we meet up, we're going to solve the debt schedule and again come back to the income statement. Fine. So don't forget to save your files. I'll see you tomorrow.